All right, so we're over here on page 280. We're going to talk about some financing legislation and some of the acts that we're talking about. You can see we got this thing called TILA, which is TILA, the Truth in Lending Act, the Equal Credit Opportunity Act, the Community Reinvestment Act, the Real Estate Settlement Procedure. We don't have in there the CFPB, which we've touched on. All of these are governmental acts to protect consumers. The first one is the Truth in Lending Act. The Truth in Lending Act was designed to protect the consumer because they are not smart enough to do their own investigation. So the government created this thing about credit so that you have to be honest with the credit. It's called Regulation Z, or Reg Z, you hear it called.
Did they touch on this in that Big Short at all?
Yes.
Okay.
That's where that comes from. Yeah, on The Big Short, because it was actually started with it, or this was part of it. The Dodd-Frank Act and Consumer Protection Act of 2010 is what helped the feds reinforce or enforce some of this. This is what created the Consumer Financial Protection Bureau. It was created because of abusive lending practices where they weren't necessarily honest to the consumer about what was going on. So the big thing before we get started is this only counts with people that the government says is a creditor. Got to be a creditor, all right? Now there is a definition for this word. I don't know if anybody in here done it, but some people have done it before where they've called and said, do you take payments? The school. And I tell them, no, I do not, because if I did, I would be considered a creditor. And if I am, then all of this stuff now applies to me. Not that I'm trying to cheat anybody, but the paperwork alone is over an inch or an inch and a half in forms and crap you have to do. So a creditor is defined as anybody who extends consumer credit more than 25 times a year, like Sears. Or more than 5 times a year if the credit is secured by first lien residential real estate. Who would that be? Mortgage brokers and lenders. That's how we get sucked into this, is through that or portion. Or 5 times a year if the credit is secured by a first lien residential mortgage. So when a lender lends money to you, you sign an IOU, and that credit that they gave you in the IOU is secured by or collateralized by real estate, and they do that more than 5 times in a year, they're considered a creditor. First lien residential real estate. Oh, 11 o'clock on a Friday. I always wondered what would happen if we had a tornado at 11 o'clock on a Friday. Is that a tornado or an alarm? One of the other things Reg Z has is this thing called the 3-day right of rescission rule. You guys probably heard it called buyer's remorse. The encyclopedia salesman came. You guys know what encyclopedias are, right? Okay. My mom still has all of ours. I mean, and they're pretty. I mean, they're like 3 rows, and you got to go to this letter. Yeah.
We used them to sit up behind the table to eat.
I think she's using one to balance the desk. So the encyclopedia salesman comes to your house, you buy it on credit, so many payments a month. You actually have 3 days to rescind that. All right? Anybody ever refinanced a house? It's called a cash out refi, where you get cash, pull cash out. You had to wait 3 days, didn't you? You have to wait 3 days to get the money, because while the purchase is not covered under the 3-day right of rescission. The refinance of a house is. So if you're doing what they call a cash out refinance, where I'm refinancing my own house, but I'm going to a higher LTV so I get money out, that is covered under 3-day right of rescission rules, so they have to wait. You go and you close, you sign the paperwork, then you wait 3 days because you wait so that you surrender your right. Because if they gave you the money the first day, you go out and blow it, come back the next day and go, hey, I want to change my mind, I want to redo that. All right? So you wait 3 days to get your money. 3-day right of rescission. The biggest issue they have, or the biggest strict regulation for Reg Z, comes in the form of their advertising requirements. This is the one that they really want to make sure that the consumers understand. You guys have been, I almost said victim, that's not the right word. You guys have been protected by this all your life, and I know you've heard it, and you probably laugh about it, and we'll cover exactly what's going on. So let me tell you, remember that house I got at 13th and LaSalle that I told you I was going to sell somebody? Sing, I'll sell it to you today for no money down. You want to do that deal? All right. Oh, I'm going to add 20% to the price since there was no money down. See how I misled him? Or, Dusty, I'll sell it to you on payments of $100. Oh, the payments are daily. That's misleading. Have you guys ever heard the car commercial? Subject to credit, all approved the credit, $300 financed at 0% financing. Now all people will qualify. That is what we're talking about. If you mention any of what they call the trigger terms in an advertisement, you have to mention all of the trigger terms. So if you mention down payment, monthly payment, interest rate, the amount you finance, the length you finance, you have to mention all of them so that you don't end up in the scenario that I just showed you where I told her it's $100 payments. That's a great deal. And then after she signs the contract, I'm like, oh, but the payments are daily. Did I not tell you that? I'm sorry, I forgot to tell you that, right? Oh, well. So if I said, hey, buy my house on $100 payments only $100, I would have to put somewhere in there that it's $8,000 finance, payments are daily at 4% interest. You have to mention them all so the consumer can go, oh, that's really not a good deal. So in the advertisement, if you mention one of the trigger terms, price, down payment, number of payments, amounts of payments, due dates, annual percentage rates, payback, all of that, you have to mention them all. Now, I could say, I'm selling my house. It's a great deal. Do you want to buy it? That's fine because I didn't mention any of the trigger terms. I just said it's a great deal. Now that we get to the contract portion, now she's going to see all of that. But I can't say, buy my house, no money down. You want to do it? That's misleading because I gave her a down payment, but I didn't tell her how much the price was. And the example I showed you was Sing, I jacked the price up on him because there was no money down. So that's what this is designed to protect so that none of that kind of stuff happens. If you violate this, you can be fined up to $1,000 plus court costs. Now get this, if it's a company, they can be fined up to 1% of their net worth. So you got like Chrysler doing car ads, 1% of their net worth if they violate this rule. That's why you see all that stuff in the small print down at the bottom and you hear the guy at the very end. Not all people will qualify, subject to 0% down at 360-month interest of compounded daily. They got to give you all that. It's kind of like those, you know, take this drug. Side effects include, I love the one the other day. Some severe side effects include death. That's pretty severe. I don't know about you, I think I'd rather have the heartburn. Yeah, side effects include up to death.
I'd rather have a little bladder following me.
Yeah. You know what? I'll go to the bathroom every 10 minutes. I'll pass, thanks. That ranks right up there with the other thing, and you guys have done it all the time. My mom used to do that. Hey, I think this is spoiled. Taste this. No. I'll take your word for it. It's spoiled. Yeah. We do it all the time. I love that. The other one I like is when people do it, and you guys did, somebody did it to me the other day. Shit, I lost my keys. What's the first thing you guys say? Where'd you lose them at? Well, I know, dumbass. If I know where I lost it, it wouldn't be lost.
My stepdad used to say, they'll be in the last place you look.
And you know, somebody said that. They'll be in the last place you look. It's not me. I keep looking just to prove that wrong. After I find it, I still look. But people do it all the time. Stupid questions or stupid answers. Where'd you lose it at? I don't know. I lost keys once. You ever lost something so bad that you start looking in places that you know it can't be? But I haven't checked the freezer yet. Let's do that. You lost your car keys. You checked the freezer? Yeah, actually I have on this particular scenario. Now, the Equal Credit Opportunity Act. Remember way back at the Fair Housing, we had 7 protected classes. What were the 7 protected classes? Race, color, religion, national origin, sex, familial status, and disability. This actually has 8 protected classes. They actually make it look like, but watch this, it's a mathematical equation. It's not 7 plus 1 to get 8. It's 7, they subtract 2, and add 3 new ones back. All right? So you got race, color, religion, national origin. Then it goes to marital status instead of familial status. They drop a handicap or disability and add age. And then the 8th one is the dependence on public assistance. So what's funny to me is they now make it look like it's okay to discriminate against disability because they removed it off the list. You'd have thought in people's infinite wisdom that had taken the 7 and just added 3 more. But no. They took 7, they got rid of age, and they got, I'm sorry, misspoke. They got rid of disability and familial status and added back marital status, age, and the dependence on public assistance are the 8 protected classes. So when dealing with someone's credit, these are the ones you need to remember. The housing are the other 7 that we did the whole chapter on. Still have race, color, religion, national origin, and sex. Now you've got marital status, which is the left-handed way to get to orientation, if you think about it. You know, if Jesse and I go in and say, hey, we want to get a loan to buy a house, they can't ask, are you married? Are you partners? Business partners or life partner? You can't ask that. That's a marital status question. All you need to know is he qualifies and we qualify, we're buying a property together. All right? That's marital status. Age, believe it or not, they still give 30-year mortgages to like 80-year-old people. You know? You should, hey, if I were you, I wouldn't even buy a green banana. Okay? But because it's collateralized by something that when the person dies, they're going to sell and pay back the loan off anyway, it doesn't matter. You know? And then the last one is the dependence on public assistance. So if someone's actually on public assistance, you can't say, sorry, I see your food stamps hanging out of your pocket. Can't sell to you because, no, dependence on public assistance is a protected class. All right? The Community Reinvestment Act, CRA. The CRA is, there are small banks out there that don't have the capability of doing some of the things that bigger banks do. And for that, they get a privilege. It's called the Community Reinvestment Act. What that allows them to do, or forces them to do, is to invest their money in the neighborhood in which they're in, to make sure that neighborhood doesn't get blighted because they're loaning out money other places. What you see are, you guys ever heard of Huntington Bank? Salin Bank, those are all CRA banks. So what they don't want is a bank in the inner city to take all these deposits from people that are working in the inner city and then making loans to buyers in Carmel, because the money's going out of that neighborhood. All right? So what they did is they get this status called CRA status, and that'll gives them some benefit with the government. We don't have to do as much work, but we have to loan like 95% of our money within a 1, 3, and a 5 mile radius of that bank. So if you've got a client that can't get a loan that may be right on the edge, go look for a Huntington Bank or a Salin Bank and say, look, my client's trying to buy the house 2 doors down. He needs a loan. He will use your bank as a depository relationship, but can you get him a home loan? Well, they have to loan in that neighborhood. So they may be a little more flexible on their requirements to do that. So keep that in mind. There are banks out there that have to loan in their neighborhood because they want this status, and they want the status because it's much easier on them than trying to keep up with Bank of America. All right? So you can literally ask them, which one of you guys are you a CRA bank? Yeah. Okay, what's your boundaries? You go all the way over to here? Well, my client's buying right inside that. I want to talk to you about a home loan. Okay. RESPA, Real Estate Settlement Procedure Act, or for short, we call it a big pain in my butt, because that's what it is. We're going to do a whole chapter on RESPA, all right? RESPA basically controls what can get paid for and who can get paid on the closing statement. When lenders use this thing called automated underwriting, or sometimes you hear it called computerized loan origination, it is fast, it's quick, it gives you an answer for a client. My guy that was like an 870 credit score with all the money in the bank, he would be a great person for CLO. Because what they check is this, and this. I went to A&M, there were 12 of us in our class. We had a girl named Amy Baker. Loved Amy, she was really good. Female, American Indian. Used to win all the scholarships. And she'd come back, she goes, hey, I got the Bernoulli Awards, $1,000. We're like, really? You wonder why? Because you're not number one in the class. Mark was number one. CLO takes all of that out. A computer goes, what's your credit score? What do you make? How much are your payments? Boom, good. Happens like that. All right? So if you got a client that you know is pretty strong, you can take him somewhere where they got CLO. You can get the paperwork done and the loan done very quickly. The opposite of that is what they call hand underwriting. By the way, all the government-insured loans are hand underwritten. FHA, VA, and FSA are all hand underwritten. Hand underwritten means there's a person that looks at them and tries to determine what's going on. So if you got a person that's questionable, might want to go through FHA. Buddy of mine, when you look at his DTI, debt to income ratio, it was like 90%. All right? But when you really talk to Sloan, what you found out was he was involved in an accident at work, and his worker didn't have insurance, so all of the medical bills went on to him. And if you could take all of his medical bills and pull them out of his debts, his DTI is like 50. So he's a good guy. He had a bad situation occur to him that he is stuck with these bills. He's now, I think, since filed bankruptcy to start over. But that was a situation of when you just looked at him and went, oh, 90% DTI? Yeah, you're an idiot. No, it wasn't really my fault. I had a situation. And there were actually special loans way back in the day. One was called the Heart Healthy Loan. If you only had medical bills like they would pull all those out and go, oh, yeah. So you want hand underwritten for somebody. Hand underwritten would be a person that would look at each situation individually. Are they changing the way the student loans are looked at? Because
Well, I mean, with the points for your credit.
I have no idea.
I was working just at a daycare and I barely did anything and I have student loans from when I was in college and everything's in my husband's name, so we bought a boat this summer and he wanted to put it in my name. He was
Yeah.
co-sign and we went to Huntington and they did all the underwriting and at first they said, yeah, you're approved because your credit score is so good, and then they called us the next day and said my credit was too new and they wouldn't do it.
Yeah.
But not all I have is student loans. I don't have any other debt besides student loans.
Yeah.
I don't know. I've just been seeing stuff on the news and I'm just curious.
Not Huntington.
I think we ought to. Did you guys see the Fight Club?
Yeah.
Movie Fight Club? I love that movie, but we can't talk about it. No, that's the whole thing. They blow up all the credit places. I'm not advocating that we blow up Sally Mae, okay? Or whatever it is. What's it called now? But I don't know if they've changed the paradigm for looking at that.
Like, you know, the renter people that we work with, Progress and stuff, they will take out the,
Yeah, and like I said, a handout, if you can come up with a reason, like I said, here's a legitimate reason when you sit down and talk to him and find out why his debt to income was so high, it made sense. Felon broke his back at work, the guy didn't have insurance, told all his employees he did have insurance, was actually lying when it came time to actually use it. He didn't have it, so all these bills now for back surgeries on Sloan came to Sloan. All right, just 1 second, are we done?